$1 trillion, that's how much the US lost in market value as China raised its AI trump card to the US Trump administration, with DeepSeek R1 making the global AI race much more intense. Monday's market sell-off sent shockwaves across global markets, with some of the most prominent US tech giants bearing the brunt of these losses. Nvidia, the US chip maker that has been at the center of AI innovation, recorded the largest single-day market cap loss in history, shedding nearly $600 billion in value. The Nasdaq Composite tumbled 3.1%, reflecting widespread investor panic. Meanwhile, tech companies with AI models on their way, like Alphabet, Google's parent company, saw its market cap plummet by $100 billion, while Microsoft, the backer of OpenAI, lost $7 billion. This meltdown is not just a financial story, it's a reflection of the intense competition in the AI landscape and the vulnerabilities exposed by DeepSeek's meteoric rise. At the heart of this chaos lies a critical connection: Nvidia's dominance in the AI hardware market and the US government's decision to impose strict semiconductor export restrictions on China. For years, Nvidia's cutting-edge GPUs such as H100 chips have been the backbone of AI model training, powering platforms like OpenAI's ChatGPT and Google's Gemini. However, these chips were also caught in the crosshairs of Washington's efforts to curtail China's technological advancements. The export controls implemented to prevent China from accessing Nvidia's most advanced chips were designed to act as a chokehold on Chinese AI development. The logic was simple: without access to the top-tier hardware, China would struggle to compete in the AI arms race. But then, necessity led to innovation, and DeepSeek replaced Nvidia chips with far cheaper chips. And now its rise has defied all expectations. Nvidia's historic sell-off on Monday is directly tied to this geopolitical tug-of-war. By thriving without access to Nvidia's advanced chips, DeepSeek has shown that US export restrictions may not cripple Chinese ambitions after all. This raises concerns about Nvidia's long-term dominance in a market where most advanced products are no longer indispensable. DeepSeek's rise also signals that Chinese companies can challenge US firms not only in software but also in innovation strategies, even with fewer resources. As a result, Nvidia's role as the go-to supplier for AI infrastructure is being questioned and leading to this massive sell-off. The collapse in Nvidia's market cap wasn't an isolated incident. It reflected a broader anxiety about the ability of US companies to maintain their leadership in artificial intelligence. With Alphabet and Microsoft also taking significant hits, the market is grappling with the possibility of a paradigm shift in AI supremacy. DeepSeek's emergence highlights a key distinction in this global AI race. While the US has focused on big budgets, high-end infrastructure, China is proving that cost efficiency and targeted innovation can deliver results. DeepSeek, built on a mere $5.6 million budget, has already surpassed ChatGPT as the top-rated free app on Apple's App Store in the United States. Its focus is on precision, speed, and affordability has resonated with users, particularly in a cost-sensitive market. Meanwhile, ChatGPT has an annual budget of $5.5 billion. The ramifications of this shift extend far beyond the tech industry as well. The US-China rivalry is no longer just a trade war. It's a battle for technological and strategic supremacy. DeepSeek's rise highlights China's growing influence on the global stage. Nvidia's sell-off and the broader market collapse signal that investors are re-evaluating the risks of betting solely on the US AI companies. Washington may need to revisit its export control strategy if it hopes to counter China's AI ambitions effectively. So the trillion-dollar question now is whether the US can adapt to this rapidly shifting landscape. Nvidia, Alphabet, Microsoft, OpenAI, and other American companies face an urgent need to innovate and regain their competitive edge. Meanwhile, DeepSeek's ascent is far from over. The Chinese startup has not only disrupted the AI industry, still it has also reshaped the rules of this competition, proving that smaller budgets and resourcefulness can challenge even the most well-funded players. In fact, its meteoric rise on Monday led to a suspected cyber attack, and the AI company had to stop new registrations completely. The question also is, who is behind DeepSeek? While not much is known about the founder, it is known that DeepSeek is funded by a Chinese hedge fund, Highflyer. The fund is both founded and run by Liang Wenfeng, who is based in Hangzhou. He's said to be an AI enthusiast and a trader since the crisis of 2008. He's also said to have about $8 billion of AUM at his fund at the moment. So clearly, money will not be an obstacle in this rise of DeepSeek and China's disruption of the global AI race. Let us know your thoughts in the comments.
Thank you for watching us on CNBC TV 18. For all news and updates, subscribe to our YouTube channel and watch us on all social media platforms.